It's Tuesday the 7th, I'm FX Plu and this is CurrencyTransfer.com's market update. And the headlines today are that sterling finds support under 130, but for how long? Long-term concerns are raised about a US slowdown and German data hits the euro. So yesterday you'll remember that Liam Fox said the odds were about 60-40 in favour of a no-deal Brexit. If that had been said a year ago, it would have been quickly forgotten, but a cabinet minister making a prediction like that so close to the deadline has to be taken seriously. So far there's been no public response from Brussels, but it is likely that they'll agree with the odds. Michel Barnier has been long consistent that any deal needs to work for all 27 remaining member states. And don't forget, the Irish border remains unresolved. Despite any tough talk from the Irish Prime Minister saying that he will veto any deal which closes the border, he may find it tough to veto a no-deal outcome. So sterling fell on the back of comments from Fox and it was supported at lower levels. The support came from corporate orders, presumably from buyers who missed out last time sterling dropped below 130. Cable touched 129.20 on the low and recovered to close around 129.45. Any talk of a US slowdown seems to be really rather premature, but the dollar index continues to rally. It's finally broken through that significant resistance at 95.25. It closed at 95.50 yesterday, but the dollar outlook has been called into question nonetheless. Tariffs could see the economy slowing down from the 4.1% GDP growth we saw in Q2, but the trade war would need to escalate significantly to threaten growth in any long-lasting way. Then we've got the Fed's interest rate plans being called into question. That path of longer-term rates and the shape of the yield curve. Fun fact, this is a graph showing interest rates plotted against duration. The geeks love it. It's starting to point towards a slowdown, and that may well have been what President Trump was banging on about when he waded into the debate not so long ago. However, to be fair, any US slowdown is a long way off, so all this chat may be a little premature. Over in the continent, the euro slipped on the back of German industrial orders, which were far weaker than expected. Forecasts were for a slight slowdown, maybe a 0.5% decline, but the June orders fell by 4%. Now, a lower euro will be of no concern to the ECB. However, the pace of decline is something that they will keep an eye on. Euro dollar dropped to 115.30 before recovering slightly to close at 115.50. Any questions, please do pop them in the comments below. Otherwise, I'll see you tomorrow.